So there's a couple things to touch on. S&P made a new record.
Good morning, guys. Alright, overnight we took a couple at 85s. Got out that one at 6 points plus 6 points, held on to the secondary. Looking for we 10 point drift back to the downside, which we almost there already. Just looking for that test of this actual punch here. This was the market. Open technically, just got punched to the upside down. So that was yesterday's deviation. So let's build out the trade for today. Alright, so that is a position we have and we hold. So we just trade GTC trades. Alright, so let's go through our stuff. Trade away old stuff. Blah blah blah. Delete data. We have like temporary live data here. So the idea was to fade the 85 aggressively overnight because we didn't get a fill yesterday, showing that the market was showing a little bit of weakness. Show you why. And the late push to the downside on the coming to the close. You see a push to the downside, pop right up here and it fell lower. So we almost closed off the 85 trades for yesterday into this morning. So let's find our value stuff for yesterday. Accept and continue. Whatever. Put a 15-minute chart. This should become secondary to you guys. It should only take you about 5 minutes. So this morning I've been at live because we were having meetings a bit late into this morning. Those guys handling up their side. They got a couple of reasonable size trades off yesterday on oil. So nothing on ES really. Got into oil so you can see where the targets are. Right to the value here low at 75. So we targeted more or less the retest of the high deviation, exactly on deviation, and we pull to the downside. So we pull out 6 points into the test of the POC, which is our internal TPE ones. Right, so let's label out our value. Value was pretty tight yesterday, 80.5 to 75.5. Go to a 5-minute chart so we wouldn't have a lot of trouble seeing what we have to do it. Make sure the stuff. So what it should be done before pre-market, we have this done. Side you can see the tight range. Lock that and find our point of control from yesterday, which was 77.5. Why is my live stream like that? Let's see about that. Yes, it was Monday. So we break 3 point of control. Almost at TP. So our secondaries, you can see why we have the secondaries right there. Value are low. Primaries for point of control. Right. And let's get our new deviation levels. I wouldn't be putting the new signal, the old signal is really pretty good right there. Deviation, expected deviation, or mode is 96. We will call that 96. We know I sell the 85, so now we move into the 96 range. If we do get the range, probably pull that number also. Use that. Blah blah blah. This is all sim though, so on this particular machine. Going into indicators, volatility, standard deviation for the 21 days, standard deviation for the 1 day period, which is 27. We call that 27.5. Yesterday's close was 75.68. 7.5. This is equal to close plus this to the guys will test of the high. Nice for the extended move to the upside. We have a kill zone there. We will make our kill zone very particular now for that side. We have our deviation to the upside, deviation to the downside is at 55. Right, so happens to be close to our body. Low from Friday. So the simple idea was to fade the market because we didn't get a breakthrough yesterday. Volume was reasonable. Look to fade the market right from the off the high point. We got in, we got out. Pretty reasonable trade. Look for technical points as your exits. Always look for your technical points as your exit. RR really doesn't matter. Equity does. Equity does matter. RR doesn't really matter. Managing your risk to reward is what's important. So if you look at the buy this market, yeah, 2 points we are looking at very interestingly at, which is the normal deviation of the close. Why are you locked? This little node here. Right there. Value area high from Friday. You should see a lot more volume. We just live exited our side. Just get confirmation that we exited just 7.5 points on the secondaries, which is the technical point of the value area low. Right, so this is what we have here. If we do see the punch to the upside, we wouldn't be selling the 85 back again today. Might sell a single. We just now got out of our full 2 contracts which we have from overnight. This is our primary entry right here. Put that here. want to have that as your primary entry. Lean on the 92s, the 93s if we do get the volume. Need to relabel this. Looking for the active band. Be a little bit more aggressive on the buy side. If we do see the dip, early dip, we're looking to buy up the market. We have identified our points 92 to 96. Right, took this trade. If you want, you may have a secondary option. If the market does tighten up, look at volume and delta for the price action. If you're running tight stops right at 84s, 85s, 4 point to 5 point stop, and you're looking for this particular 64 here to 61 as a promising entry, and then you have value low at 55. If you do see an extended move to the downside, don't need this anymore. Why is my live stream doing that? Don't know. Probably OBS could be in trouble these days, so issues, always issues. So this is a heavy lean point. You can see why at 55 might be a serious lean point if you do have bears in the market. So always identify that particular lean point at or above. So you have your primary scenario, secondary scenario for your buys. Maybe between 64 and 61. For the buy, primary buy between 51s and 54s. 54s is the most applicable place. 54 to 55s, most applicable place to enter a trade. Yeah, so have your band set up. Make sure that you know, if, as you know, I primarily don't enter position slides. Trigger happy finger. If you already see the move, push to the upside. If you have an idea, look for the value high. Know where your stops are if you want to be aggressively sell side. I would not be aggressively sell side unless I see a break at this opening node here, which was this punch. I don't know if you might be able to see it because of how I wouldn't be aggressive. So you identify your node, particular node you're looking at is right here. That punch. You can see how it's leaning on it. So if you're looking to be a bear, you need value high or breakout value low, return to point of control, and then sell off. Which we are looking to do this morning if we do see the bears come into the market pretty heavily. Volume wasn't all that bad overnight. Keep closing myself up. And on oil, we had a pretty good play yesterday on oil. I'll show you that and what I expecting from oil. Well, we have a position on already. Why are you doing this? Oh, this is one day. Sorry. Bam, 250,000 based on the opening. That is not bad at all on volume wise. So this is a particular inflection point. Don't get involved as yet. Wait for the break on either side, then look to actually take advantage of the market, looking at point of controls based on how heavy the break is. So you're watching this point. If it does break that point, you're looking for value area low to POC. If it does not break this point, then you're looking for value area high entry, which is market open. I think close to market open. So let's get this done. Let's go to oil. Yeah, pull some profits off. I'll show you my Tesla a little bit later. We already have a position on oil from the open. Yesterday you could see I was looking for a range play. Was wrong on one range play, got the second and took advantage of it because we had two contracts based on the second and the secondary. So this is Z contract. Wait. Where's my CL? Where did my CL from yesterday go? What the hell happened here? Somebody boo-booed my stuff. This. Alright, we were looking for the range play yesterday. You can see we had a particular range play we were looking at, which was this particular range play here, which is looking for reactive area. Got the 44 cell. Go to the 50-minute chart. I don't know why they're showing up like this. Everybody like they're having problems with the charting system today. Got no 55 cells back then. Took the swing, took some buys up, bought up some. Maybe it's actually a short term. What is stuff. Alright, so you would see the inflection we were looking for right here at the 90 yesterday. Got the inflection, we tried to enter right at 95s, got the opening play, got reversion back up. You'll see what the 44 was. On the 1 hour trade, we identified this particular node right there. Bing. So we got in at the 40s, close to perfect entry, and got the dip into the close. Now we're looking for the bullish move in the market for the continuation, so we got in back at the 56.85 level prior to the open. You can see why we entered at 68.85 to 90s, looking for the push to the upside in the market, at least to test out this sticky again and let the market roll and do what it wants. It's 1, 2, 3 equal measured move for the secondary exits. Primary exits already been taken. Right here at $58. You know where we lock up would be. You know, we actually failed tested the 56, 60, came up to the 40, sold off, close right above the inflection point. Once we had a close above 56.09, you know we have bullish market. Well, the intention is we think we have a bullish market. Wait for the push up, wait for some volume in the market to come in overnight, and then buy the test this morning early. The benefit we have these days, so you're looking at your 57.90s or your TPs. The benefit we have these days is we don't have daylight savings time, so you can see my time is now 10:51, so we'll do stuff a little bit earlier. Not really based on the market timing, but we just have enough time once the guys come into the office. We could rock the boat. We had some rather large orders sitting here. Just pull them. Don't have issue with that. Bought some contracts off. Bought some again. Right at the red line. You know the inflection. What was we are looking for. See our point node. Ping. That is that. I'm on. Let's see if I can pull up. I'm gonna save this just in case. Pull off a little bit of money on Tesla. You're holding some on the 15s. Outright shares. Owning outright shares these days. I sold some puts at 10s day before. We bought here, sold some puts. Pretty cool. So we could always have the outright option to own. We're running these on 30-day expiries. I had to check what date my actual expiry is for these. Got out a couple. At least, I think one we got out of. It's the test 5-minute chart. Our volume on it. What the intention was for the early stop. How we looking to trade the market off it. We got out a little bit early at 21 or 21.50. I think we took got off because we entered the option trade here, so we wanted to reduce risk on the buy side on the actual shares. So let's see what we got this morning before we actually make up the mind. So I need to just go and get some coffee. So I would neither be a buyer or seller at this point right now. If you're long, make sure your stops behind this point, which is 72s. If you're looking for a short-term buy, if your bias is long in the market, is a very good opportunity if you have that as your option to enter the market. If you're long, you have your identified bullet here, stops beyond here. So you're only taking like about 4 to 5 points at risk maximum here, but you have a couple stuff in your way, which is point of control and value. So if you're trading value, you may have some issues there because the point of control is that tight and the market is that tight. Also note where the overnight inflection was. Bam, bam, bam. So let me just go and grab some coffee. I'll be back in like about 5 minutes. Off the check those lighting myself as I was walking across. Hopefully you'll make some good money off the Tesla trade in the long term. So buying puts is a good idea. Yeah, the original target. That 5720 is a sticky number 2040 on crude futures. We will doing some analysis. That's why we reacted to in this morning, very early this morning. We have primaries over there, so we have zero risk on that particular trade. Meaning we have our stops placed where we took profit on it before we same amount of risk we took profit on. Let's pull something and show you guys how tight the market was yesterday. That market was pretty tight yesterday. Full demo stuff. You really have to pay it, pull out of it. Need to remove this now. Don't need this. That. So this was a move from last night. You can see where the market just opening up, pop to the upside. Fade that pop, always fade that pop like that. And we had the particular point that I did like. Right. So this yesterday to live. You see a Gaussian pattern here. Have a repair to do here in my opinion. Anytime you create new highs, you require repairs according to how long it takes to repair. That is the issue. So the gap on gold didn't work yesterday. And that gap didn't really hold. It had some repair. And the gap didn't go far enough in our opinion. So let's take that into consideration. Seeing what shape the profile is. Notices where the high point is at right here. Your kill zone is built right there. We have a trade sitting right at 64, which is the gap fill. Small gap to fill, but required to be filled. Always required to be filled. So it's now 10 AM on the East Coast. You can see we identified point here, what the move is, being patient in the market. So what you're looking for is weakness or strength. Don't see either or this morning, not either or. Sit on your hands all morning long if required. If you were looking for a tight value play in business, value low to value high. I'm not interested in that particular. We want to see if we get extension out, see how the market is treating at the 85s here. They already intend to trade it. I just want to see the reaction because this is overnight weak money, just got taken out, but spit it out of the market. Here's where the drama is. You can see where we identify the node. It's either looking for a break, down, through, support, found, break, through. You're being a bull, should have been just very quick on the draw. Watch the break, push the break to the upside, scalp 4 to 5 points. One of my guys. Well, that's how we just trade as a team. We have one scalper on the ES, he looks for 3 to 4, 5 points. Me personally, I more position traded with 8 point stops. Look for the bigger swings in the market, which is more reasonable if you're trading the top stuff, 10k plan. It allows you to use GTC trades like this, which is more my style of trading. And well, we have our wire guy here today. Particularly, really is not part of the team. He is more or less A consultant, pretty good at trading oil. He trades very heavily on oil with oil, so we more or less piggyback off some stuff that he does. Very particular, meticulous on what he does. So, as you know, I am weaker on oil, so that is why having him on team is something that's very advantageous to us. So you see this target here, the 93 again. Just want to see if we get that area and look to move that area. Aggressive move is this test here. Would wait and see what, if and what London brings us. Now London close is at 12:50 my time, I assume. 12:55, sorry. Always know what you're trading, when you're trading, how you're trading it. What is your risk factor? What is your style of trading? Don't jump from one style to the next. Recipe for disaster. I can tell you that from personal experience. Want to scalp, want to position. 299 things at the same time. Buy, sell, hedge. Once you can get that bounce there. I think you just pulled one of the secondary buy contract on the oil, so it's no really flat on oil. This is making very hot in the Caribbean this morning. Very, very hot. It's like 34 degrees at 11 a.m. Outside is pretty hot. Patience is required when the market at all time highs. If you get run over, you get run over. Accept it. That is why trading all time highs one of the most difficult things in the world to ever do. This actual 80 point is very inflective because if you're using strikes as a validation, which is option strikes and option chain, and what option chain look like. You guys should have like if you use Thinkorswim, you would see the option chain in your option market. I use particular stuff. Don't advertise that for nobody. Whichever one platform that I personally trade on, because I'm not allowed to have a Thinkorswim account. Who planning on trying to get my S7 license eventually. It's a long path after you get that to somebody who is non-US, so this is the year of your fight here today. All day. Looking for the break of that. It didn't break IB high, IB low yesterday during the day, which more or less solidified our position to hold through that. Don't know why my video on red, which is wild, mad, unfair. So if you do have the platform, monitor your delta. And it's just me sharing some stuff because those boys can handle, those two guys can handle themselves. I know the two new guys, when they come in next week, I would have some stuff that they teach them. Oh, I could probably post that blog back and ask them, where is my blog? I posted a blog on what turned out to be a blog on Friday. Stop that video. Dun, 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 dun. Copy it and just paste it out. Hello. And the battle begins. So we trading breakout this morning. I'm looking for that breakout. Want to see that volume, want to see that delta. Go ahead, positive or negative. I want to see breaks are either clean breaks are high, low. So you have your inflections. 1, 2. Want to see the breakout, you return off. So those guys know exactly how we have to train that because that is part of the trade plan for this morning. There's a break. Right, want to see clean break this area. There's a 73. Put a line over so you can actually see it. How come don't stick on me now, computer? Want to see a clean break of that. Want to see the return. Back to here. Close to here. Have your stops above here, so you know your stops at above 82, so you want to measure your risk. And this is how we have to measure our risk on having positions in the market. See clean breaker value. And 76 is the optimum entry. We're looking at 75 to 76. 8 points. 6 points on the primary. You need to see the break at this level. Return to 75 to 76. Make sure your stops are behind, as far back behind here as possible. You want to take 6 points arrows. 6 points arrows is applicable here, but you want to be behind this node here. So it has many ways to skin a cat. So you can see scalper went up 5 points. Right, that's a point. Right, break. Don't jump in the market as yet. If you do jump in the market and at your own risk, 75 to 76. One at 75, one at 76. Eight points on the stop. Go to the volatility, which is 10.5 points. Check the TP. So when you see clean break, you're looking for the return. 75 and 76 is your entry. looking for that value here. Low test, return to value. You know, we stops are above here. If we don't get into the trade, we just don't get filled or get into the trade. Don't chase the trade, in my opinion. We never chase the trade. Don't ever chase the trade. So you set up at 75. Looking at the London close entry, looking for the bears to be in the market. I just wait as 11 points on this. So 63.5. We'll take it at 64. Look to manage in and out their position. This is the actual trade. You can see why we're looking to enter right at that point. See the clean break with vol value and delta went negative. Look to enter the trade at that position. Make sure we have point of control value, a high structure and structure node to the high side. Have your targets, make sure you can manage. Reason we look for the breakout today is because we didn't break the IB high or low yesterday, which is weird. No, not weird, but doesn't really happen that often. I think it's like 95% or something like that, 90% at least from all our data that we have. And if you want to put as why we put in this as 3 star too. Where was settlement? Dum, 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 dum. Make sure this is in 75.5 or 75.7. Oh, come back there. Now, all this is just opinion, guys. Don't click freaking. This is not our signal system. So this is why what we call a 2 star. We have settlement. We look in the enter the return of settlement test. And during that, we don't care if we miss the trade. We're looking for the breakout. We don't chase the breakout. We look for particular point in the market. We identify what the breakout points were here. I wanted to see a clean breakout of that and have an entry right there. All we just want to see is our return and then look for the follow through. We know what our risk profile looks like. We know what we take profit and RR should be. And then from Delta Analytics, there should be purple. Breakout point, you're looking for structure breakout point. Don't need that. Identified node. So a short-term value high should be out of the market on structure. Don't get greedy unless you have three positions and you're looking for your home run and you're already cleared everything. Well, 75% or 66% of your money already of your risk. Because you want to take small bites out of the market. You don't look for pretty large bites, 16 points maximum. Couple of times I usually get a 3 to 1, so that's 24 point. But that is based on my swing trading strategy and just sitting for a few days in the market or just get a lot of volatility. When we get the tweet storms, I'm trying to be political, but that's what happens. Have my labels in the right place. You know, we have London closing a bit, so there, here. London closes in an hour and a quarter. Look the trade small, look the trade smart. Failure is an option, always is an option. Good pull, save yourself 8 points so far on the oil. Tesla is long term stock, so I already cleared out one and have a put option in sell puts and buy call. Don't ever do that in your life unless you're very in tune with the market. Takes a lot of studying to actually, for me to actually trade options. And for beginners, micro trading is trading the micros is the best option right now, especially if you have a top step. Cheap to actually trade. You're allowed to trade on a pro account, which is you don't have to pay for your data feed, which is something good, very good. Once you have a pro account, it just targets are very reasonable in our stuff because how we do risk management. We look for being in the long haul in a trade. Well, in trading, eat little, live long is our motto. And don't have fear of taking losses. Know exactly what you want to trade, have a plan. Don't trade without a plan. Trading without a plan is not good. Oh yes. Oh yes. And if you're on demo, always make sure that you penalize yourself one tick on entry and your trade got filled on live. So you're actually in the position right there. I'm a separate monitor one time, but I was guys doing so. I could see what they're actually doing. Move that across to the old side back so those guys in the office. That's why I think my stream giving some trouble. Need to finish that chunk for my higher speed internet. Internet sucks. So once you're in a trade, all you have to do is use your management. Look at the market. Don't need to sit all day in the market if you're in the trade and you have stops like this. You don't need to more or less try to think at the market or try to execute. Now you can see why me particularly don't like to market execute. Particularly in the idea. For me to market execute that, I would be giving up at least 2 to 3 ticks on an execution, which is putting on more risk because I would need to see the move back in and out, and by the time I trigger the trade, I would be like 2 to 3 points either in benefit or out of benefit. Don't like it, not my style of trading at all, at all, at all. So now I'm looking for is a clean breakthrough and see if volume comes in. Otherwise I'll start to micromanage the trade. London close would be very important to make my mind up if I taking a loss or a profit on this trade. Now is where the nerves are usually come in for any trader, not trader because actually have a position on now. So drifted in. So that we actually in the position. Know where that those two nodes were. One node there, secondary node identified. Keep your chart as clean as possible. So my execution chart has no line, none, 0 line. Tony has a volume profile on it. 0 line. Want to be able to see actually where we are entering and exiting the market clean as possible. Analytical chart is separate. My recommendation is you don't need 2 desktops or whatever you're trading with to advise trading off by your phone. If you're trading off by your phone, just clean trade off by your phone. Know exactly what you're doing, when you're doing it, how you're doing it. Always use 2 monitors, don't need nothing fancy. Normal 16 meg memory. So this system was my old trading system. See how much it's running. Because I'm streaming on it. And trading is all about building your trade plan and executing your trade plan. Yeah, it's Microsoft. I need to fix that. Hey. I think Dan might have been on that. Unless you run your ship without own problems. Like free stuff. Oh yeah. What the oil is doing. Oil is sitting patiently there, idea. Don't want to be infected today. Got in at, you think he got in at 88 early this morning? Yeah, I think it was 88 we got in. let us sit on our hands this morning and trading small and trading smart. Take what the market offers. Don't try to get me and out on RRs or real footed. See what the market is actually doing. Make up your mind based on what you see as price action on the market, because you have your entries and exit laid out a bit far, so you can self-manage your trade. And I just tell everybody to all their own on their style of trading. Having your particular style of trading is your own business, and how you, once you have an edge, a reasonable expectancy, it doesn't have to be, once it's a positive expectancy, meaning that when you take profits, how much money you manage your equity, you don't manage equity and risk, not RR. RR is to us not too valid of a point. We look at technical points where we want to be in and out of the market. And build a bias. Once you build a bias, you should have, not hold that bias till you die, but should have a reasonable confidence on based on your expectancy. Give me a second. What do we do? Let's take it over and you guys. If you're there. You want to have a
Good morning, traders and friends. Welcome to the market forecast for Tuesday. Today is Tuesday, November the 5th. I'm John Hoagland.
Alright, sure. You're looking at what also, so Just more or less took our position on oil. Oh. The instruction is like test of the tea. I think we just got filled out of him. Awesome. Measured risk. Right, this was yesterday, what we were looking at yesterday. We lost on the break at the secondary. Don't know why. Lost on the break at the primary. We tried to enter the short here, we entered the original short here, got the TPs, tried to enter the secondary there, failed and did take entry. We got in at 40, put the flow down, made some money, up 40 ticks on it, and the secondary filled. TP2 filled on yesterday. We wanted the 30. See why we wanted the 30. It does break against us. Yeah, we stopped above. So we active is at 30. So you can see why we bought this morning at the 94, 95 levels. We actually got in a little early this morning as soon as we came in. We know where the inflection was. Let's transfer that. We got in short on structure, knowing where the stops are located. Always trade what you see in the market. Our short position is built as this. This is a 2 contract trade. Looking for 30 points on the initial. Oops. Just got filled right there. Look at the amount of that structure. Let's see if that structure would hold. Know exactly where the entry and the exit is, and look for the 2-to-1 trade if we do get the return to the downside, and look for exit strategy in and out. So using this breaker here as if we do fail at that point, we know we have enough protection here to keep us off the trade early. Know what the targets are, which is node right there. Wanted to see if that option would be available to us. We're looking for the London close in the next hour. Start to act. Yes, is doing absolutely nothing. Oh, it's almost that time. I need to go and do a couple things. Something like that. I might cut the stream at around 11 a.m. US time. So these are the active positions. 2 contracts shorted on oil. 1-to-1, 2-to-1. Make sure if you know you need 1.5-to-1 as a short trade. 1.5-to-1 is your option out. We self-manage and look at what the market gives us. Already banked some profits this morning, so we banked a single from here. Then we want to hold. Trade through looking for the price looking at the price action and seeing right here what was going on. So we got out at 20 on the return of 20. Pull the trigger on the short to the downside, but failed. Looking for our order flow to match what we're looking at. our delta isn't that hot, so on the ES. Most important thing is you're out of the trade. See this particular point here at plus 6 points. That is all you're required to do on a consistent basis to be profitable. Secondaries are gravy. Once the trade becomes just free, in that any position you have, you don't have any more risk based on your secondary for your secondary. We don't get nervous, we don't close our trades unless we see something. If we do see a break of this point, then we will anticipate a touch of that point. We would need to reduce our risk if we don't see a reaction there, but we're looking for the follow through to the downside, so always manage your risk properly. If you're trading short and you want to be tight on your stops and you have 75, your minimum stops is 79 to 80. Now we use technical stops as much as possible. Slow morning for Tuesday. You look at particular days there we have more risk on the board. Less risk on the board. Fridays are risk day, obviously. Mondays are tight trading day usually, unless something happens over the weekend. Some tweets. We require a tweet. No. That is what has pissed me off sometime in the market these days. Don't like unexpected news. Speaking about news, we have on the calendar for today. Forgot to show you guys what's up with the calendar for today. So, this is Forex Factory. Flyer figure for today. Nothing much. We have ISM. We had ISM this morning. Yeah, reasonably positive. Nothing else to do aside the GBP and Canadian stuff. So that's the only thing we may fight us in the market, because we know we need some repair in the market. I just always get screwed over with changes in time, which is the UK does go on daylight savings early, I think a week before the US, so last week I was like, why this happening now, why that happening. Break is not clean at all. Cool guys. We don't say Udam. May have gotten better energy. Yeah, 2 contracts. Enough risk. May only got like 300 boxes of game view. This trade does fail. And this is showing you why the nodes are there. Right there, you can see that original point, where this original point for the kick was built off of. Why we look for this point here, what we're looking for as areas of consolidation. It should go to one day. I think those guys identified it yesterday. That's the inflected void rally. Look for your doji candles, find the area, identify your point, identify your range on the market. It look a little bit messy on this. So find the inflection point where you expect inflection to happen. And losing that trade is quite alright. It's part of trading. Complete now reloading on there's a if we do see this might take one outright here back in the market at 15s if we do get there today and try to build that position out. Oh, that flow is very lucky this morning. Locked up for Tuesday. So what I would expected a little more vol and volatility on the order flow. This is why having two screens is very important when you're trading. A lot of clicking, open, close. Computer a little too slow to run everything together all the time. You see where we're looking at targeting. Maybe push upwards. This little vacuum here, right until this point, the targets. A lot of the price acceptance right here. You have the gap right here. You have the price acceptance right and this here. So you know what you're looking at, when you're looking at it, and how to look. And most of it is because we didn't get a big gap and go yesterday. Tight trading range. Exhibited in full minis. You manage if you take profits in range. Just looking to see if we can get a primary out of the way. Roll your stops. So more or less the comment I posted on Top Step for this morning was the steps you exactly have to go through as a trader. Every trader has to go through that. I am not a professional by any means. Shooting my little pea shooter. Pew pew. Single contracts and 2 contracts on minis and micros. Once in a while I do trade the Nikkei. Mm, 10 minutes. So our trade management, if we do get filled on our 6 points, we have this point of control, this small little band here. Our bootstrap, we'll go above that, half the risk, we'll be covering up to here, which is, I think, market open. Should be 9 to be open. Yeah, I think that was market open. What was the open? Yep. So the idea is clear 6 points, use 4 points, you guarantee 2 points, so guaranteed profit, look for your secondary and manage through your secondary. If your 6 point does fill. So because I need to go across and talk to those guys and we can have a little powwow, eat some lunch, not gonna sit down and watch trades, have one of them sit down and watch trades by next to us, sit down and jump online, jump on Discord and play some video games, playing World of War Tank Splits this morning. We always have video game time built in based on what the market is doing. When we see the market slow like this, have one guy monitor our trades, 2 of us play video games. It's stress relief for all of us. 2 like video games, and we just use it as stress relief. So I do have 9 minutes more to waste this morning. So trade small, trade smart. If you're looking for high probability entry, which we do have here, which is our secondary entry, which is look for a node here, look for the 12:30 London close at 12:30 to 12:35 if you're so inclined and trading oil. There's execution time for you if you're so inclined. Try not to encourage anyone to trade open on oil market because the amount of leverage that you need trading on the open oil market, very expensive. So you're looking at being loaded up right around here. That execution may work out pretty well today. We have our early execution, so if you have an execution there, always know where your stops are. We fall most of the time 30 1-to-1s and 2-to-1s and monitor the trade. So just be careful on what you're trading, how you're trading it. So okay guys, that's it for this morning. Probably see you guys on the market recap. I might jump in and put my 2 cents in on what happened in the market today. Okay guys, bye.